This is Cat stock, CAT, Caterpillar Inc. And this is just another stock to look out for because of the new infrastructure. They're talking about a $1 trillion infrastructure bill coming out. So it looks like America is going to spend a bunch of money on public infrastructure, and Caterpillar's one of the top five, maybe top, I don't know, maybe top two companies to kind of look out for as far as companies that'll be getting that money. Um, yeah, so I just took a look at their balance sheet. It's not great. It was like 7 million um, cash and 26 million in current liabilities. It's worse than like a 1/3 kind of cash to current ratio, but I mean, it's probably better than most of the companies that people are are buying in on right now. But great this is not a great price here now to jump into cat. It's kind of popped up. And so I guess my outlook on these infrastructure things is that we're getting uh, sort of fake early news that the US is going to look into infrastructure projects. But I think over the next several years, the US will actually start doing a lot more infrastructure projects. And I suppose the presidential election will have quite a bit to do with that. I think Trump presidency would probably be more likely to do that. And yeah, so I don't really like this price here as an entry point into this kind of thing. This is more just a stock to put on the watch list as far as infrastructure goes. If the U.S. starts pumping a bunch of government money into infrastructure projects, these companies like Caterpillar look to be in a good kind of long term position. So because those projects should be several years kind of. I mean, who knows, like 5 or 10 years of kind of infrastructure stuff that the U.S. might be looking into doing. Um, yeah, but don't like this. Don't like this. And I guess let's take a look at the VIX. I think the VIX is doing some interesting stuff right now. This is kind of the thing. Yeah, okay, so the VIX is pressing up, and the S&P, the S&P is just kind of flat, and we have the VIX pushing up again. So this kind of move up, when you get the VIX trying to move up against sort of a flat consolidation on the S&P, that's what we got here. That's what we got right here before the big drop last time was a push up in the VIX, and this was over like 10 days or something before the big drop. But this kind of push up in the VIX while the S&P is consolidating here, that could be leading into another move up in the VIX. So I think, yeah, people like the TVIX because it's 2x and it goes crazy. But I just want to point out again that I mean, look where the TVIX went up to, and look at this big blast that we got on the VIX here. Only put in this tiny little amount on the upside. So the TVIX versus the VIX is an interesting one. The TVIX, I mean, those levered funds are really only supposed to be for day trading. And so holding those overnight, you're going to start losing percentages on the compounding. This is not investment advice, but they're just not designed for long term holding. And you can see how the VIX kind of popped up above all these intermediate ones, and the TVIX didn't even pop up above this first one. And that's kind of that levered shape where you're just kind of this volatility just kind of eats away at the price value of the TVIX. It just kind of just kind of decays over time as you hold it because of the compounding. And the VIX has more of a normal volatility kind of tracking shape. But the SVXY, this is the one I point out a lot. The SVXY is an upside down. It's a short VIX. So if you want to go long vol, this is what I do to go long vol is I short the short VIX. And you can see here that this was the big spike. So we got a huge spike, but the normal VIX came back into this range and spiked, but the levered kind of structure of this one and the volatility is pushing it down this way. So if you're going long vol, this is helping you. Like the VIX did that, and this SVIX kind of flattened out because the compounding is helping you. So this one is okay to hold short long term because the compounding is helping you basically. And so I have a pretty big short a short short position on this SVXY that I got back here, and that's good. That's good once you make a move down. It's really hard to get back up on this thing, and so this is a good one to kind of hold longer term. And as I just pointed out on the TVIX, I mean we had this huge thing and this big pop here. Like this thing here is a pretty big pop, but it just looked like this little thing like that on the TVIX. And getting back up to this level on the TVIX is crazy, and this thing, like if this is the big blow up on the VIX, I mean the VIX did that, and we just saw the chart. I mean it's just kind of worked its way down, but yeah, the VIX has worked its way back down, but this thing hasn't. It just kind of stayed flat. And so if you get another move like this size, it'll be a percentage, and it can go this direction past here. And so if we get another big blast in the VIX, I'll definitely be comparing the shape of this thing to like the TVIX again. But I think this is, I guess what I was trying to point out is that I was just looking at the S&P, this consolidation, and this has been the best indicator that we've had as to which direction these consolidations want to break. And the VIX is pushing up, and we're just getting a consolidation here. And with the VIX pushing up, that is a downward trend. And so I think this, from the technical perspective, this thing doesn't really have a direction that you should expect it to break as far as technicals go. But if you use the VIX as an indicator, it would indicate a down move because the VIX is pushing up against this thing. I guess that's what I'm getting at. And let's do some momentum and see what this thing looks like. I haven't flipped through the momentums on the S&P in a while. All right, so the weekly, this is the super long term. We're still down here in the bear market territory long term, and the trend line here is getting into just pushing into bull market territory. And so if this thing flattens out on the bearish side and turns back over, and that would be over the course of a month or something, long-term thing. But if it turns bearish and stays on this bottom half here, that is a long-term bear market, like several year bear market indicator. So this is the big indicator to watch for a long-term bear market. Right now it's still bearish and it's trying to go bullish, but it hasn't yet. And so we don't really know. We don't really know if we're switching into a bull market or not from that indicator. And then on the shorter, like couple month look, we're up in bull market, like this bull run pushed the whole market into bull territory. And then we got a bull side swing to a higher one here, and that's higher peak. And now we're just kind of flattening out. It started trying to make a bearish move and started flattening out. And so this is not steep enough to be a bearish move, and obviously it's going up on the real chart too. But to be a bearish move, like an actual bear move from here, needs to go really steep and it needs to separate the blue from the red. It needs to pull the whole thing down to this side of the chart. And so this is bull market territory right here, and this kind of flattening action is bullish. So the bears need to get a down, like a steep down here, in order to go actually bearish now. And then let's flip down and see what kind of stuff looks like. Yeah, so this swing down pulled kind of the weeklies, like the 4 hour candles, kind of a week or two kind of outlook, all the way into bear territory, and it's kind of I mean it's pressing up, but it already hit max divergence here. Let's kind of flip through and see what this looks like. Okay. Okay, getting up into bullish territory and flattening and kind of flipping. All right, so so like on the 2 week outlook, it still is bearish side, and right now it's moved big enough to be bullish, on the kind of this week. And so this move hasn't turned bearish yet. It's trying to go bearish now. And if it gets steep enough to pull this thing down, same thing. Like this isn't big. Like one big move down can pull this to the bearish side pretty easily just for this week. And so it's starting to flip. It's starting to get steep. And this is indicating that it's trying to move down right now. And we'll see what it does. And then coming in. Yeah, so this is moving bearish, but this is not steep enough to be a bearish move, and that's why you just see kind of this consolidation sideways. And so if this just kind of continues to consolidate sideways down to like kind of flat, that's not very bearish, and that has a good possibility of swinging back up. So it's not really that's not really indicating much. It's just kind of working its way down to a neutral. It's not really making a move that is indicating it's not indicating much from the momentum. And it's kind of obvious on the chart that it's just kind of flattening out here. But yeah, the momentum's not indicating very much. But potentially it's starting to turn over. And yeah, the momentum is kind of switching. So it does look like it's trying to make a bearish move right now, but it's not making a very big one. And if this doesn't steepen more, then this is not going to look very bearish. Like when the bearish activity doesn't actually pull the chart down, that's how you get a bull pivot. And I guess that's kind of the look. I would say if it continues to flag out sideways overnight and comes in sideways tomorrow, then that will be pretty bullish. And to be bearish, it probably needs to rip pretty soon. It needs to actually make a move down pretty soon. So the momentum, yeah, isn't really giving a great indicator, but I think the VIX is indicating that this thing wants to move down because the VIX is pushing up, and that's kind of the best indicator we've had as far as a leading indicator on the direction of these kind of consolidations. It's just the VIX. What's the DXY doing? Yeah, DXY's being weird. This is an interesting one. So this, I mean, we had this huge blast down, and this looked like a decent consolidation reversal shape here. And so I was expecting this to continue, and it didn't. It did. What in the world is this, like, smooth U? That is just weird. That's a weird shape. So I don't really have an idea of what this is doing right now. I think that the Fed doesn't want this to go up. The Fed wants to weaken the dollar right now, I think. And sort of the long-term deflationary pressures would be pushing it this way. And that's sort of the milkshake theory, like the Brent Johnson milkshake theory. Or if you look at Raw Paul, I mean, they talk about the other currencies being able to deflate more than the dollar because the dollar is like 70% of the monetary supply, and so just that tendency for other countries to do that and the US not being able to do much about it uh, should be bullish for the dollar long term against other currencies. And then you see the interest rates being near zero, and I mean, Jay Powell just was talking today about the interest rates, saying that they don't expect positive interest rates to come back for quite a while, like a couple of years. They're not even thinking about that now. They are trying to keep it at zero and not go negative right now, basically. And he said he's fighting against deflationary pressures. And he said there's been deflationary pressures for the last, he said like 20 years is what he said today. And that's pretty much true. I mean, the velocity of money has been coming down since, I think since .com, but definitely since the financial crisis. Velocity of money has been going down the whole time, and the interest rates have been working their way down the whole time. And I mean, the interest rates have been coming down since, the, I guess it was the 80s, like 82, or maybe it was 70s or 80s, but the interest rates have been coming down a very long time. And so that was a high inflation environment back then with really high interest rates. And now we're in a very, very low inflation environment with low interest rates. And so there's a ton of money printing going on. But when I say inflation, I mean in the worldwide monetary system where America can print a bunch of money, but the other countries can print more if they want. And they should probably want to do that because they want to sell their commodities to pay their dollar debt. And so they can inflate more than the dollar, and then that pushes those commodity prices of those countries down lower. And so that's kind of the deflationary environment where the dollar is, you're getting monetary inflation of the dollar, but other currencies can inflate more and commodities can still go down, even against the other currencies, definitely against the dollar. And that's sort of the thing probably that scares the Fed, that they can't really do much about, and they're trying all these tricks for the general economy, but everyone's just looking at the stock market, and the stock market is not really, it's not really what the Fed is focusing on. The Fed is focusing on the bonds, the bond rates, and the currency exchange pairs, and trying to keep the dollar solvent, and trying to keep the banks functioning, and trying to maintain the dollar as the world reserve currency. And so, like the U.S. stock market, I know everybody says the Fed's like pumping the market up and everything like that, but I assure you that's not their top priority. Like they're trying to keep the banks functioning and trying to keep control of the monetary system. Um, but I guess just as an indicator, like the dollar has not really been a leading indicator that's particularly useful. It's just been swinging basically inverse to the S&P, but sometimes it's a little bit late or a little bit early when it swings. So I mean, if you see the dollar kind of making a move and the S&P is flat, it could lead the S&P, but right now it's not really making much of a move. It's like maybe making a little move up, which would indicate a little move down in the S&P, but not too much. But the Japanese yen did make a big move here that led the last big move down. And so if the yen drops again, that could indicate that the S&P might want to come down a little bit, or if the yen, whichever direction, the the yen, if it makes a big move, will lead the S&P in the same direction. And so right now it's not doing anything. S&P is not doing anything. The dollar is not doing very much. Um, the technicals and the momentum are just kind of chilling. Like we're not getting very many good indicators, but the VIX is a good one, and the VIX definitely led with this big. Like the S&P was just completely flat this whole time. The VIX was pushing up here, and that led into a huge break and a big drop in the S&P here. And so this little push here could be indicating a smaller kind of down move in the S&P kind of coming now. But this is a thing to keep an eye on. Just see what the VIX does and see if it kind of leads the S&P. Like if the VIX keeps pushing and keeps pushing up this way, and the S&P just stays flat and keeps consolidating, like that is a really bearish signal. And we'll see what develops with this. But yeah, right now, even on the bubble model, this area is not really indicating which direction. I mean, I think there's a good chance that we get up here and get a double test of this line, just because it's just common to double test these long-term support lines. Like this is a 2-year bull market support line that was supporting the bull market run, and we back tested this thing way back here, and we've tested it again. So it's like one test is good enough to break down. If it's going to unwind this tangent line here, like this one test can do that, but it's common to get two. So we're just kind of in between these two trend lines, like halfway, just swinging around. And on the bubble model, I mean, we're looking to either break this one and test it or test this one from the bottom. So, I mean, from here, there's not really much of an indication of what we're looking to do. But as far as the bubble goes, in the bearish case, if you're looking for bear activity, this is a really good place to get short if it gets up here and tests this thing. And if it breaks and back tests this one, this is a good place to get short also. And so you might get both opportunities on the short side. Or if you're bullish and you're don't fight the Fed person, then everywhere is a good place to buy. Just buy every day, every level. It doesn't matter. It'll just keep going up, right? So we'll see. We'll see if that's true. I've been talking about the liquid. The Fed is so. I was looking at some Dave Portnoy like little clips today where he's just like, yeah, you just like grab some random letters, cram them together, just hit buy, 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 and it'll just go up. It's green all the time. Um, it's so ridiculous. Oh, you know what? On the technicals, everyone's pointing out like this is an island top, and I'm saying it doesn't look that islandy if you actually get in on it, because we just have like this gap that filled here, and we have this gap that has filled here. So I'm not really seeing the island when you actually get in here as much as other people are pointing out. But as far as the island goes, like yeah, we did kind of get up into this range a little higher than probably people want to see for an island top. Like you want to see this island top being kind of a resistance line. But it is sort of acting as resistance now, where this action is. All of this stuff is happening underneath. So I guess on the technical, on the island top, we are kind of getting the island top resistance shape that island top people would look for. Even though we did get a little bit of a poke up here, but the consolidation is below the island level. If you can see the dotted line here. Yeah. So to me, this this island top from the technicals, it looks a bit more bearish than bullish, and this thing is just a whatever. That could break either way, but the island top is indicating a little bit more bearish of an indicator, and the VIX pushing up is bearish. That's actually bearish. So I think I'm probably like 60-40 bearish on this shape here, and I guess shorting the SVXY basically long volatility from here is probably good because the volatility chilled out a little bit with this up move. And I think maybe, oh man, XLFs are complicated now that they're announcing this bond stuff because these primary bank financials are going to be, that's what they're going to be aiming at with that individual bond buying. They're going to be floating the financials, and the financials are going to, it makes it really tricky. But the IWM, I think, is probably my favorite short right now because several reasons. Well, one, they have a huge solvency risk. There's a bunch of companies that have bad cash flow and debt, and they can't pay it, and they're not getting bailouts. These are smaller companies, and they've stopped doing buybacks. And this is where the switch from buybacks to companies issuing new shares is going to pop up as in these small caps. So I think the overall market conditions and the solvency risks is going to hit IWM. And these guys are not on that list of individual bonds that are going to be purchased. Whereas the XLF, these are like they're going to. This is exactly what I think they're going to be buying as these financials to keep the banks functioning if the banks come into a solvency squeeze. And so shorting the S&P I think is a little ridiculous because it has everything in there. There's a bunch of good companies that I don't want to short in the S&P, but the IWM I would probably individually short most every company in there, and yeah, and it just trades. It trades easily. I mean, there's just tons and tons of contracts if you're looking at puts and stuff like that. So that's my favorite short for right now. I think it has the most risk to all the problems that are in the actual economy. Whereas like the infotech sector is still doing buybacks, and now the XLFs, that bond buying stuff, is gonna probably be affecting those a little bit. And so, yeah, I think IWM and also people. Well, let's see what the put calls are on the S&P. Yeah, so people are starting to go. They're starting to go long the S&P again. And so the longer that people go on the S&P, the more likely. Oh, excuse me. The last time people went super long S&P is when we got it to turn over, and and so now people are going long again. So I think people being too long the S&P is a little bit of a risk. What is this? Oh, Russell volatility. Oh yeah, Russell volatility never really came down. This is another look at the IWM is the Russell 2000, and the RVX is the Russell volatility. And so you can see here that the Russell volatility never even came down very far. Like the S&P volatility was trying to get down into like 20 or somewhere. Russell volatility stayed way up here, so this is really dangerous. And it popped way up here, and it didn't really settle out very much. And so the yeah, yeah, the Russell is my favorite short right now, I guess basically. Oil, man, who knows? Oil's such a mess. This is the USO. So like the USO is a fund that I would like to short when it's in a position where shorting makes sense, but I mean oil is kind of bullish right now, and I don't see a big risk to for it to crash again. But this thing long term, if you short it long term, the structure of this thing just kind of fights against the upward movements, and then it exaggerates the downward movements, and it's just because of the futures contracts and the compounding in the structure of the ETF where it just flattens out your up movements. And you can go look at my oil playlist and check this stuff out, but I don't know. People aren't talking about oil a whole lot this week. But you can see if you throw the actual oil chart, oil went up, up, up. It actually went up, and the USO just did this little tiny move up relative to oil. And so you're getting that kind of contango and compounding thing happening right now, where it's just the up movements just aren't that big. But if you get a down movement, it will be big. So yeah, so this thing, if it's getting close to a spot where I think it's going to make a move down, this is something I like to short, but yeah, I don't know. Yeah, not right now. I don't think so. All right, so that's good. So Caterpillar, this is a video about the infrastructure bill that is hypothetical that they're just kind of talking about now. But I think that's a real thing that's going to be happening over the next, who knows, 5, 10 years or something like that. Like big government spending on infrastructure and a bit of deglobalization, less stuff from China. And this is going to make stuff way more expensive in America if we start trying to move manufacturing here. And if the dollar starts getting worse, all of that is going to make things really expensive in America. Whether or not you get the inflation scenario or not. But that looks like what's going to be happening over the next 5 or 10 years is trying to move a bunch of manufacturing back here. It's that's gonna be ugly, but it could be good for the cat stock. And I'll keep taking a look at a couple of companies like this. I forget. I had one more I was gonna do. So that's it for this one. I'll take a look at the next company on the infrastructure list. And happy trading.